Everyone, it's David here from Freedom Founders. I want to talk to you today about turning a cost into an investment. Everything we do in life, every decision we make in life has a cost. And oftentimes it is just a cost. Let's think about some of those things. Our time. Where we determine we put our time, whether it's by intention or just by default. And again, not judging, but where we put our time, there is a cost or an opportunity cost as to where we could have put that time elsewhere. Now, we have to make decisions. People that we spend our time with, for instance, could be family members, could be friends, could be working associates, staff people, groups, conferences, where we decide to go and put our time with other people. That can be a cost if it's not fruitful, if we're going there for invalid reasons, or it could be a huge opportunity. It could be an investment. Investing in other people, that's huge. If you're making memories with people you just care about and love, family members, great friends, people that you care about, that's an investment, not a cost. But on the other hand, if you're spending time with the wrong people, doing it for the wrong reasons, if you're letting other people kind of write your agenda, tell you what to do because of guilt, then you are probably finding those areas of time spent being a cost. What about other things that you do with your life? What about other things that you spend money on? So you may go spend money on a date night with spouse or significant other. You may decide to go to dinner and to a movie, or dinner and a dance, or dinner to the theater. So you spend money to do those things, right? And then if it turns out to be the experience that you were looking for, hoping for, met your expectations or exceeded your expectations, then I think you would say that's an investment because you invested that experience with someone you wanted to do it with, and hopefully it all turned out well. A great investment. If, on the other hand, the experience, the dinner, the theater, the movie, whatever, was not up to your expectations, that could have been a cost. It could have been an expensive cost. Maybe the whole night didn't turn out for other reasons. You just didn't get along with that person. Sometimes that could be a cost, right? So we can't always determine what's going to be a cost or investment up front, but at least we can think about it. Now, what about in terms of investing in yourself? So most of you have invested a lot of time and a lot of capital, a lot of money on tuition to go to school, all the way from say post-high school, and there was a cost there to your parents because they paid taxes, but post-high school, so whether it was vocational school, it was college, community college, onto professional graduate schools, there's definitely a cost there, both time and capital. How has that turned out in terms of an investment for you, or was it a cost? So I think a lot of times today, a lot of schools today, not all, but a lot of schools, I think it's more of a cost to kids and their parents if they're both going through it and having a lot of debt, or whether they have debt or not. I think there can be a lot of times not the returns that we had maybe decades ago when education really was something that provided a multiple of an opportunity. Today, there's not so much opportunity today, and depending upon what type of education, what type of degrees, etc. So again, not right or wrong. It's just that you have to determine, was that education, was that tuition, was that fee, was that a cost or opportunity? What about in investments? Well, that's a big one that people like to look at. Well, if I'm going to invest in something, like put my money in something like a stock or a bond or a mutual fund or annuity, or into a business or into real estate, hopefully I'm doing it as an investment. But if it doesn't work out so well, or what if you lose your money and don't even get the principal back, then I think you've had a cost. You've probably had an expensive seminar in that regard, right? You hope that you get something out of it. So how do we turn a cost into an opportunity? Well, the point is you've got to do a little due diligence on any of these aspects, whether it's your time with relationships with people, whether it's your expenditure on experiences, trips, travel, dinners, dates, movies, or it's your expenditure of capital into what you hope will be fruitful investments. So if you're starting a business or a dental or medical practice, chiropractic practice, you are going to outlay some capital. You either borrow capital, you put your own capital in, but you're outlaying capital. You're going on the hook for capital. And you've got a plan. You've got an idea that you're going to turn that capital into what will turn out to be an investment, because it should produce for you multiples over what that initial cost was. On the other hand, if you are one who doesn't really have an idea as to what you are spending money on or thinking you're investing in, more of a speculative type of investment. So you just hope that you're putting money in on, I'm going to make some up here that you may agree or not agree with, but let's say cryptocurrency. Very volatile, right? Some people would say, hey, that's a great opportunity. It's a great investment. Well, Maybe it is if that investment actually produces and goes up. But what if it goes the other way, like volatile markets do? It goes down. That you probably would say that was a cost, a learning cost. I paid some dollar amount to learn something that maybe I should have taken heated advice on somewhere else. So where am I going with this? I talk to doctors, dentists, chiropractors, veterinarians all the time, both in my membership in Freedom Founders, and I talk to people that are from the outside that just asking questions, good questions, asking about, how do you invest in particularly like David real estate or anything, but real estate's what I focus on. And I always say that you have to determine, what kind of investor are you? What kind of investor are you? Meaning, are you someone who's trying to swing for the fences, that you like to take chances, you like to take higher risk, you like to gamble a little bit more? Then you're going to probably have more costs than you are going to have winners. Now, they may balance out. Babe Ruth was the greatest home run hitter in baseball, but he struck out 2 times for every time he hit a home run. That's kind of what swinging for the fences is. And if you're okay with winning 1/3 of the time and losing 2/3 of the time, then that's a good track record for you. But I think it's better to make it big or make your investments on smaller deals that are strictly more in terms of investment. Doesn't mean you can't take some margin or some percentage of your capital or money and put it in some things that are maybe a little bit more speculative. If you've got that free way to do that, if your margins aren't so super tight, if you don't have lots of debt, if you've further along in your career and you want to try some things, then that's up to you. In that particular bucket, you're a little bit more of a speculative investor. Not saying that's right or wrong. But if you really want to set the course to have sustainability, predictability in everything you do, particularly your investments, which are important to you, the cash flow from your investments, which is everything that I talk about investing in, the cash flow has got to be predictable and sustainable. Everything else is going to be icing on the cake. But if you're swinging for the fences, where the cash flow doesn't matter, you're just hoping that things go up, 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 and you just hit a high roller, chances are you won't. And I've talked to so many dentists who have tried that in their businesses. They've tried expanding businesses, having multiple practices. They've gone into joint venture syndications in other asset classes, alternative asset classes they had no business being in. They've gone into cryptocurrency, trying a lot of stuff, hoping they hit that big winner, and they're probably doing no better, if even as well as Babe Ruth. And again, Babe Ruth wasn't making money. He was swinging for the fences, and he had the best record ever at 1 home run for every 2 strikeouts. So keep that in mind when you're thinking about cost versus opportunity, cost versus investment. Which is it? Depends on who you are, what kind of investor you are, and how you are intentionally going about determining where you're going to put that particular capital. That's what's going to determine whether it's a cost or investment. Keep that in mind. Love talking to you. Remember, always stay focused on your freedom. I'll talk to you next time.